Hello, this is Joe and Darren once again with Urban Hillsides Real Estate. And this is really about an update, isn't it, Darren? We're talking about interest rates have gone down. And I guess we should start with what we talked about a couple weeks ago.
Right.
That there was a tipping point. We were thinking, oh, what's the announcement going to be? And will it dictate the rest of the year?
Totally, that was the conversation. There was a Fed meeting where they would make a decision on rates, and that decision could change the overall outcome of the year going forward. That decision was no, they did not adjust.
Right.
Shortly thereafter, though, something happened that twisted it all up. and that is the unemployment numbers were adjusted down pretty far.
Yeah. I was going to say very crazy.
Right.
Yeah.
We won't go into the drama of what happened after that, other than the fact that the expected in mid-cycle of their meetings and announcements, all of a sudden the sentiment shifted, and the belief that a rate was coming was now being baked into the market.
Got it.
And rates.
And the next day, that's what happened.
Absolutely. Rates went down.
Almost.
Yeah, and they have drifted down almost a quarter of a point since that happened, with the expectation that there would be a rate reduction. There won't be a mid-cycle reduction. It's the anticipation of what will happen on September 17th, which is the date of the next announcement formally. And that was reinforced. The other event that happened then, the Jackson Hole speech this past Friday, from Powell, reaffirming that it was a strong likelihood. But as always, it's a fluid situation. They'll continue to analyze the numbers, the economic numbers, and there's no final decision.
Right. Well, as you said, there's going to be GDP numbers and other things coming out.
Inflation numbers.
But quite a turn of events, though. So
it is a turn of events. And, I'll just tell you the two components they're focusing on. I don't think anybody thinks inflation is going down. Okay, I'll start there. I think there's still an expectation that inflation will rise based on tariffs. They think this upcoming or this past month's numbers might be equal to the previous numbers. But the other factor then is employment. And in this case, employment might be more important than inflation. So even a rate reduction could trigger more inflation in reality. But
so for September 17th, there may or may not be a change. And what does that tell buyers at this point?
Right. And what you mean by that is that the financial markets and the bond market are predictors of the future. So that quarter point adjustment we've already seen based on conversations and meetings and discussions may already have happened, as I just identified, and the announcement could be a non-event. It will be an event. It will be great.
Sure.
Here's the Fed funds rate reduction, but that has no direct correlation to interest rates being reduced. It's based on the 10-year Treasury yield. And as a forecast, the market has already baked it in. And I believe the statistics you located were 89% currently.
Yeah, exactly.
That there will be a rate reduction in September. So with that level of certainty at the moment, there might not be a further reduction in rates in September. So yes, buyers, if you've been waiting for rates to come down, they've already started coming down.
Okay. Well, great, guys. If you'd like to talk about this, let us know. Have a great week.
Bye.
Take care.